Friday, July 24th, 2020, Maneco 64, home of alternative economics and contrarian views. M2 money supply is growing at a 50% annual rate as gold approaches its all-time high at 1920. Yesterday we traded to a high of just below 1900, around 1899 or thereabouts. Is that a negative that it didn't break through 1900? I don't think so, because it's gone up so quickly in the last week or so, and so has silver. Markets, as I've said many times in the past, don't go up or down in a straight line. They take rests, just like anything else in nature. But I think M2 is very important. And before we look at the data from M2, which was published yesterday by the St. Louis Fed, let's look at the definition of M2. So what is M2? According to Investopedia, M2 is a calculation of the money supply that includes all elements of M1 as well as near money. M1 includes cash and checking deposits, while near money refers to savings, deposits, money market securities, mutual funds, and other time deposits. So it's basically savings or funds that can be liquidated very quickly and put into M1, so to speak. And if you listen to my interview with Alan Myers a few days ago, I recommend you do. I'll put it up in the cards and in the description. He talks about how unless the money or the reserves that the Federal Reserve creates to buy assets in its balance sheet, unless that goes into M1, you won't see inflation. Well, not that you won't see inflation, but you won't see the rise in prices, in consumer prices, in things non-financial. But now it looks like we're getting that because M2 is very close to being all cash, right? Because it's very easy to liquidate a money market fund and put it into cash and to spend it. And the fact that it's growing at 50% is quite significant, I would say, and that's annualized. And that's one of the reasons why I think precious metals are doing so well, and I expect other tangible goods also to continue to do well. I saw an article yesterday, or a headline, I didn't read the article, how the billionaire classes made a killing from this crisis. Their assets have gone through the roof. So they've got a lot of firepower, and they know now that cash is going to become trash when there's talk of keeping the programs going, sending people checks, which is basically helicopter money, I would say. We saw yesterday that President Trump backed down with his demands for payroll tax cuts, and that it looks like the Congress and the president are going to send another paycheck or more paychecks weekly. I'm not sure if it's weekly in the US, but they expire at the end of this month. But I would expect Congress to continue. It might be a little lower than the previous time. I think it's going to be 70% of what they're having now. But this is happening all over the world. This is not just a US phenomenon. It's happened in Hong Kong. In Hong Kong, people got 10,000 Hong Kong dollars a few weeks ago. One of my viewers from there even sent me a photo of the cash he took out from the ATM there. And everyone in Hong Kong over 18 got that. So how long is this going to be going on for? That's uncertain. Just as uncertain as this crisis we're having is, and just as uncertain as they want to make it. There are other signals out there that are pointing to the economy not doing well, and that's the bond market. You don't even need to read the stories about what's going on in the economy, even though I do, and it's not good. You just have to look at the yield curve. And the 10-year yield is broken through that 0.6% level. It's now at 0.57. That's very significant. The 30-year as well is dropping quite aggressively. It's almost down to 1.2. It's down about 3 basis points today at 122. The shorter end of the curve isn't moving as much, but I do expect it to do so. I noticed yesterday, even in the UK, the gilt market, which is the equivalent of treasuries, the gilt securities, government bonds here, up to 8 years, we had a negative yield. And why are yields going negative? Well, because the central banks have promised to keep purchasing those bonds to keep interest rates low. So what that does is that encourages speculators to front run the central banks, and they drive the price even higher and the yields even lower. And I think the same thing is going to happen in the US. And usually bond investors are known as smart investors. And the fact that longer term yields are going down means that they don't see the economy recovering anytime soon. That's what it's a signal of. But at the same time, there's a lot of cash out there. So we've got like a funny kind of scenario where you're going to have stagflation, right? Rising cost of living, slow economy, high unemployment, like the 70s. But it looks like the bond markets are going to stay pretty elevated, which was the opposite of the 1970s, where we saw bonds go down quite a bit. We even saw the 10-year yield go up to about 16%, and now we're at 0.57, which is crazy, right? That could turn, who knows? That would be one for the books. If bonds start dropping, it would bring the whole house of cards down because this market is so dependent on borrowing and credit. So I don't think the central banks are going to allow yields to go up. So they're going to keep adding reserves, and I think it's going to keep seeping through to M2. And that's why we're going to see no end in sight to the money creation. And just show you the chart here of M2 money stock or money supply. I took the level from the 24th of February and to the present level there. That's about 19.2%, but that's over this period here is not annualized. Annualized is just under 50%, 49.7, so virtually 50% growth in M2. I think this is one of the reasons why we're seeing commodities, especially gold and silver, do well. And it's not a surprise. I've been saying that all the other major fiat currencies, they've made new all-time highs this year, and it was just a matter of time until the US dollar price made an all-time high. We're not there yet, I know. I'm not counting my chickens, but it's very likely that the dollar price of gold will go through 1920, and that's going to confirm the bull market, I would say, in gold, because it's going to show that it's not a dollar phenomenon, it's a fiat currency phenomenon, even though the dollar index doesn't look very good right now. But I wouldn't get too bogged down on the dollar index and the price of gold, even though it's probably helping a little bit, because if you look at the dollar index, it bottomed around 70 in 2008 when gold was at 1,000, and now it's around 94, the dollar index. So it's gone up actually in the last 12 years, and gold's gone up as well, almost $1,000. So the inverse relationship is not really clear in the long term. So let's quickly look at the markets then before we sign off here this Friday. I guess it won't be as long a video as usual. It's 8:22 a.m. We got spot gold at 18.90.50, up $3. Range has been 18.81 to 18.94.50. So yeah, we'll have to wait and see. By the time I finish editing and publishing this video, we could be above 1900, or we could be at 1880. Who knows? That's one thing you need to realize. It's going to be volatile here. The higher gold and silver go. Silver took a breather yesterday, and yeah, it's unchanged right now at 22.60. The range has been 22.38 to 22.87. The Dow is down 235 points, or just under 1%. So the stock markets are not doing very well. We saw yesterday the Dow and S&P dropped just over 1%. NASDAQ dropped over 2%. So stock market's a little under pressure. S&P is down 27, just under 1% as well. The NASDAQ 100 futures is down 1.7%. So it looks like the NASDAQ, which is doing really well this year and has outperformed the other major indices, is actually leading on the way down. So that's quite interesting, I would say, as well. We've got sterling down 0.2% at 127.19. The euro is unchanged, just below 116 at 115.97. Dollar is down 0.5% against the yen this morning at 106.27. And the dollar is up against the yuan at 7.03, up 0.25%. WTI crude is down 0.5% at 40.81. I won't go through the bond market because I've done that already. So yeah, let's just keep an eye on things, on the markets, keep an eye on gold, see if it breaks through 1900. I think yesterday there were some headlines saying gold was above 1900, but that's the futures, gold futures. I think the front month now is September. I'm not sure. It could be still August, but I think August is going off the board soon. So yeah, the price I look at is the spot gold price, and that's the one that you need to keep an eye on. Some blogs don't put the spot price. They have a feed to the futures price, so that's why it looks like it's above 1900 yesterday. Someone commented and contacted me through the messages. Anyway, if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.